The markets are closed, but the business stories are just heating up. Hello, I'm Robert Tan. Catch up with us on Business Brief. Asian markets were mixed in the first trading day of the week. This as several major indices closed for holidays, including Japan's Nikkei 225, Hong Kong's Hang Seng, and South Korea's Kospi. Australia's ASX 200 slipped by 0.9%, and Taiwan's TAIEX dropped by almost 1%. Indonesia's Jakarta Composite Index, meanwhile, rose 0.5%, and India's Nifty 50 climbed 0.6%. In the currency markets, the US dollar weakened against several major Asian currencies. The greenback dropped more than 1% against the South Korean won and almost 0.7% versus the Singapore dollar. It also declined by 0.5% against the Japanese yen and nearly 0.2% against the Thai baht. Meanwhile, the Australian dollar strengthened, gaining 0.7% against the US dollar. The USD-HKD pair remained unchanged. Commodity and crypto markets showed mixed movements. Gold prices rose by 0.7%. In contrast, oil prices declined sharply, with West Texas Intermediate crude falling more than 3%, Brent crude down 3%, and Dubai crude slipping more than 1%. In the cryptocurrency space, Bitcoin dropped 0.9%, while Ethereum declined nearly 1%. U.S. President Donald Trump says trade talks are ongoing with multiple countries, including China. He stresses his top priority is a fair deal with Beijing. Trump tells reporters aboard Air Force One that he won't talk to Xi Jinping this week, but that U.S. officials are in contact with their Chinese counterparts. He repeats his accusation of other countries taking advantage of the United States and insists that the steep tariffs is just the U.S. meeting retribution. Since April 2, President Trump's officials have met with trade partners after imposing tariffs, 10% on most countries and higher rates for others, temporarily suspended for 90 days. He also introduced 25% tariffs on autos, steel, and aluminum, as well as 25% on Canada and Mexico, and 145% on China.
Every country, almost without fail, friend and foe, has been ripping us off for years. So we're meeting with almost all of them, including China. And at the end, I'm setting the deal. I keep saying, when are you going to, this is not like a big deal that's going to be signed. In some cases, we'll sign. We don't have to have signed. I'm going to be setting the deal. I'll be setting a tariff.
The Philippine delegation to Washington recently held productive talks with the U.S. Trade Representative as Manila pushes for fairer tariff rates amid growing global trade pressures. Secretary Frederick Go, Special Assistant to the President for Investment and Economic Affairs, said protecting local industries was the top priority in the negotiations. The talks come as the U.S. imposed a 90-day pause on new reciprocal tariffs, including a proposed 17% duty on Philippine exports. During this window, a 10% baseline tariff remains in place for all trading partners. Trade Secretary Maria Cristina Roque, who is also in Washington, has expressed hope that the Philippines could secure zero tariff status to enhance export competitiveness. The outcome of these talks could significantly impact Philippine exporters, especially in high-value sectors like electronics, garments, and business processing, as they navigate heightened global uncertainty and tighter trade conditions. U.S. intelligence agencies are now in the crosshairs of the Trump administration's federal downsizing drive, raising new questions about global risk monitoring and market stability. According to the Washington Post, the CIA is preparing to cut up to 1,200 jobs, with thousands more likely across intelligence units. The move comes as President Trump and billionaire ally Elon Musk accelerate a cost-cutting agenda that's already seen over 200,000 public sector jobs eliminated since January. For global markets, the stakes are high, with business leaders warning that deep cuts to intelligence could increase exposure to cybersecurity breaches, supply chain shocks, and reduce visibility on geopolitical flashpoints. The fallout could influence risk pricing in energy, tech, defense, and emerging market investments worldwide. U.S. President Donald Trump says he is open to extending the June 19 deadline for China-based ByteDance to divest its U.S. TikTok operations if no deal is finalized by then. Trump, who previously granted a temporary reprieve from a congressionally mandated ban, said he has a sweet spot for the app, claiming it helped him gain traction among young voters during the 2024 presidential elections. The ban was initially slated to take effect in January. However, Democratic senators warned that Trump may be overstepping his authority, insisting that only Congress can modify the terms of the divestment order. TikTok, owned by Beijing-based ByteDance, has 170 million users in the United States and remains a focal point in the wider tech and national security rift between Washington and Beijing. The outcome of the TikTok divestment fight could set a global precedent for cross-border tech regulation, data privacy, and foreign ownership rules in strategic markets. U.S. President Donald Trump imposes a 100% tariff on all movies produced outside the United States. A movie said is aimed at reviving America's struggling film industry. Trump has authorized the U.S. Trade Representative to begin formal processing of the tariff, arguing that foreign governments are luring away filmmakers and studios through heavy incentives. He claims the issue rises to the level of a national security threat, alleging a coordinated campaign by other countries to dominate film content, messaging, and influence through media. The policy, if enforced, could upend global film distribution and trigger retaliatory measures from major movie-producing countries, including those in Europe and Asia. Investing legend Warren Buffett shocked shareholders, announcing that he would step down as CEO of Berkshire Hathaway at the end of the year. Berkshire Vice Chairman Greg Abel will take over as CEO. The 94-year-old industry leader made the announcement at the end of the annual meeting over the weekend. His decision ends a 60-year reign that shaped global markets. Shareholders are at a loss, but say this legacy will endure.
I'm not selling a single share, as Warren is not selling a single share. So I'm completely in on Berkshire.
He's just irreplaceable for me. But I'm not sure for others, but for me, he's just irreplaceable.
We're taking a short break. The biggest business stories from around the country are up next. You're watching Business Brief. The government is looking to reshape the country's employment landscape and power economic transformation. We have Sujin Kim on the line with more details. Go ahead, Sujin.
Robert, the Philippines launched its first ever 10-year National Employment Master Plan, the Trabaho para sa Bayan Plan 2025 to 2034, a landmark initiative aimed at modernizing the country's labor market and driving economic growth through policy alignment and business-led job creation. Led by the newly restructured Department of Economy, Planning and Development, or DepDev, formerly NEDA, the plan seeks to address structural gaps in the Philippine employment landscape. The plan takes direct aim at key business and labor challenges, including job skills mismatch, low productivity, informality, technological lag, and slow investment uptake, all of which have contributed to the country's below ASEAN average labor force participation rate, especially among women and the youth. DepDev underscored that while employment figures are improving, the numbers mask deeper issues such as the high incidence of informal work, low-wage employment, and limited social protection, particularly among solo producers and micro-enterprise workers. Under the plan, the government intends to leverage public-private coordination to attract investments in high-potential sectors. To drive future job creation, the plan identifies critical and emerging industries based on urgency, economic linkages, employment multiplier effects, and strategic alignment with national priorities. The plan also targets a strong push to boost female and youth participation in the workforce, addressing the Philippines' historically low labor force participation rate, which stands at just 48.8% for women, well below regional peers such as Vietnam at 72.5%. With this plan, the Philippine government signals a stronger policy policy commitment to driving job-creating investments, closing labor market gaps, and preparing the economy for transformational shifts, laying the groundwork for a more inclusive and resilient future. And those are latest updates from Pasay City. Back to you, Robert.
Thank you for that report, Sujin Kim. Meanwhile, Bangko Sentral ng Pilipinas issues a fraud alert. Scammers use the BSP's name, logo, and staff identities. Una Financing Corporation, a fake entity, targets loan applicants. Victims are asked to pay fees and give personal data. BSP denies ties with Una and urges the public to verify claims and report suspicious activities. The Basis Conversion and Development Authority, or BCDA, secured 7.72 billion pesos in investments in the first quarter of 2025, more than triple the 2.49 billion pesos recorded in the same period last year. BCDA President Joshua Bingkang attributes the surge to rising investor confidence in strategic growth areas like New Clark City and Camp John Hay. Major projects include a 2.7 billion peso industrial park by the Science Park of the Philippines and a 4.8 billion peso housing development by a Filipino-South Korean consortium, part of the government's national housing program. Both projects are in New Clark City. The agency says these investments are expected to fuel local economic activity and generate jobs in surrounding communities. BCDA is now eyeing more projects in other conversion sites, with investors watching whether early gains can be sustained amid a tougher funding climate and rising competition for capital. The Philippine economy appears to have lost some steam in the first quarter of 2025 as global trade tensions and weak business confidence continue to dampen growth momentum. A Business World poll of 15 economists showed the country's gross domestic product likely grew 5.8% from January to March. That's below the government's full-year growth target of 6 to 8% and slightly lower than the 5.9% recorded in the same period last year. Still, it marks an improvement from the revised 5.3% growth in the fourth quarter of 2024. Economists attribute the modest gains to easing inflation and front-loaded government spending ahead of the election spending ban that took effect in late March. But with the U.S. imposing new tariffs and global demand slowing, companies in the Philippines have grown more cautious, pulling back on spending and expansion plans. The official first quarter GDP data due out this week will be a crucial barometer for policymakers and investors as the country navigates heightened global uncertainty and strives to meet its 2025 growth goals. The government's gross borrowing slipped to just under 200 billion pesos in March as lower foreign debt offset local funding needs. Latest data from the Bureau of Treasury shows total borrowings reached 192.45 billion pesos, down over 7% from 207.27 billion pesos in the same month last year. The BTR attributes a drop to a decline in gross external debt, which fell to 34.65 billion pesos from 50.87 billion pesos year on year. Despite the slight dip, economists say the government is still likely to maintain a robust borrowing program this year to finance infrastructure and bridge fiscal gaps. The Bangko Sentral ng Pilipinas, or BSP, may once again slash the interest rate by 25 basis points this year. Jin Bigoy, Executive Vice President and Head of Consumer Banking of the Bank of the Philippine Islands, explains in Bilyonaryo News Channel's Business 360 this is due to the low inflation rate in the country. If her forecast materializes, this will bring the policy rate to 5.25% from currently 5.50%.
Again, this would depend on the inflation, which is still very low, very positive development for us. So that should be a good indication that the BSP might be open to further cutting rates to support economic growth.
Okay.
CIMB Bank continues to face service disruptions, raising fresh concerns over the stability of its digital banking platform amid growing customer frustration. This comes despite repeated assurances from the bank that earlier issues had been resolved. Many account holders say they still can't access their accounts or complete basic transactions, with some taking to social media to demand transparency and timely support. The problems began on April 26 when the bank suffered an unexpected system error. A day later, on April 27, CIMB publicly stated that services had been restored, but intermittent access issues have persisted, fueling doubts about the robustness of its digital infrastructure. The Bangko Sentral ng Pilipinas has since issued a warning saying it may impose potential supervisory action if the bank fails to address the disruptions adequately. The incident comes at a time when digital banking in the Philippines is gaining traction and highlights the urgent need for stronger system reliability as more Filipinos shift to online financial services. A consumer advocacy group is calling for a full-scale audit of the country's largest power distributor as questions grow over how electricity rates have been set over the years. The National Association of Electricity Consumers for Reforms, or NASICOR, is urging President Bongbong Marcos to order the Commission on Audit to review Meralco's records covering the years 2005, 2006, and 2008 through 2024. The group wants to determine whether Meralco has lived up to the promise of least cost power under the Electricity Power Industry Reform Act, or EPIRA. NASICOR also accuses the Energy Regulatory Commission of failing to follow a Supreme Court order to create a rate-setting methodology that ensures fair pricing for consumers. The issue came to a head earlier this year when ERC Chair Mona Lisa de Malanta and Commissioner Catherine Maceda dissented from a majority ruling approving a 19.9 billion peso Meralco refund. They argued the decision disregarded the Supreme Court's January 2025 directive to balance consumer interests with the needs of investors. NASICOR is now calling for a full revamp of the ERC leadership, citing its failure to conduct independent audits before approving multi-billion peso refunds. The dispute highlights broader concerns about regulatory transparency and consumer protection in the power sector, at a time when Filipino households continue to struggle with high electricity costs. West Zone Water concessionaire Manila Water Services Incorporated may push through with its planned 49 billion peso initial public offering this year, despite ongoing tariff uncertainties and broader market volatility. Ultra Bilyonaryo Manila Chairman Manny Pangilinan says the company intends to proceed with the IPO to comply with its legislative franchise, which requires the utility to go public by early 2027. Under the law, Manila must offer at least 30% of its outstanding capital stock to the public by January 2027. The announcement comes at a time of heightened caution in equity markets, with other major filers, including e-wallet giant GCash, holding off on listings amid growing uncertainty from the Trump administration's new round of global tariffs. If successful, Manila's IPO would be one of the largest public offerings in the utility sector and a key test of investor appetite for infrastructure-heavy firms amid rising policy risks. Philippine shares closed the first trading day of the week in the negative territory ahead of tomorrow's release of the latest inflation data. The PSE index ended lower by 0.8% to close at 63.59, finishing the day as the third worst performer in Asia. All sectoral indices ended in the red, with holding firms falling the most at nearly 2%. Decliners narrowly outpaced advancers 93 to 92. Total value turnover reached 5.7 billion pesos. Majority of the day's most active stocks ended in the red, with international container terminal services falling the most at more than 1%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.45 against the greenback, strengthening from previous close of 55.57. Marvel's latest release, Thunderbolts, generates $162 million in global box office sales over the weekend. A crucial performance is a milestone for Disney as it reboots its superhero universe amid shifting market conditions. While the film had a muted opening in China, in part due to Beijing's growing restrictions on Hollywood imports, amid trade tensions, markets in Europe, Latin America, and Southeast Asia delivered stronger returns. Box office analyst Jeff Box said the outcome was in line with expectations and positions the film as a strategic setup for Marvel's upcoming slate. Starring Florence Pugh and Sebastian Stan, Thunderbolt serves as a narrative launchpad for Fantastic Four this July and Avengers Doomsday in 2026. Two films Disney is banking to reinvigorate its content pipeline and monetize one of the most valuable intellectual properties in entertainment. The stakes are high for Disney as the studio faces rising competition from global streaming platforms, shrinking theatrical windows, and increasing geopolitical barriers in key growth markets like China. Thunderbolts may be just the beginning, but it's a test case for how well legacy IP can be repackaged for a new, more fragmented global audience. And that's a wrap for today's Business Brief. I'm Robert Tan. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News channel. See you then.